Hey everybody, hope everyone's doing well and had a good day. This is the recap of the Emini for Thursday, February 20th, 2025. So this is a general recap of what happened today, and I want to talk about the more major breakouts and second leg patterns. But before I get into the recap, I wanted to share something. I watched something this morning, and I try to watch it every day. There's a seminar on YouTube, 6 or 7 videos, different parts, from Bob Proctor, and it's called You Were Born Rich. And I stumbled upon that from Ali, which I'm so thankful for. And I've watched through these a lot of times, probably on my 5th time through watching them. And each time the information, it's not like I'm learning anything new, but I'm getting reminded of things that I forgot about. And the process of learning is that way. You need repetition. So that goes for trading, it goes for anything. But what I just wanted to share some words of encouragement today, because in the third part of that seminar, they have a guest speaker named Paul Hutsey, and he talks a little bit about failure. And he says it's really important to understand that failure is a really positive part of your life. And the reason for that is you can't have failure without success. So when you think about it, your bad days they're really blessings in disguise. It's really important to your best learning lessons are going to be from your worst trading days, because you can always learn a lesson. You can always take something out of it. What could I do better? What did I do wrong? You ask those kind of questions, you're going to start finding answers. So I know from experience, it's very easy to get upset with yourself or with whatever when you've had a bad trading day. But it's worth trying to see it as a positive, because you don't want to get emotionally wrapped up in how bad it feels to have a bad trading day. You could actually look at it like this. You could say, I'm really grateful for the lessons I learned today. And yeah, that's just one of those things. Every failure comes with the seed of an equal or greater success. So with that said, going into today, we had a gap down going into the day and a really big sell-off. And as some of you may know, I'm studying 3-bar micro channels more than anything. That's just the signal I decided to study and stick with. So for me, bar 5 was a signal today. The problem for me was that because it occurred on bar 5, I have a time filter for my signals. So any signal that occurs before 10 a.m. Eastern Time, so before bar 8, I'm going to filter it out. And the reason for that, it's really from the white paper from Ali, but Al Brooks talks about the same thing. Al Brooks, he'll say 50% of the breakouts on the open, no matter how strong they are going to fail. And there is some truth to that, but I also believe, it always seemed a little mysterious to me that I couldn't trust breakouts on the open, but I think the confusion is cleared up when you take a look at the Globex session and you can see the context leading up to the breakout. So in this case, I think it was okay to take bar 5, but for now I'm just listening to my filters and waiting, so no trade for me there. So big bear breakout down to bar 7. You know what I'm going to say. The second leg down, likely. However, it became really climactic. We had big bars, 5, 6, 7, really big bars. Huge tail on bar 7, pullback, likely. The tail on 7 is due to bears taking profits. And if bears are starting to take profits, we may have to go higher to find sellers. And then we got bars 9 and 10. So bars 9 and 10, you can call it a bull reversal and follow through. Strong enough up that the bulls get a second leg, and you can view it a couple of different ways. You could say bar 11 was a pause, and bars 12 and 13 was the second leg for the bulls. But you can also view it like this. The market rallied from the low of 7 to the high of 13, had a very deep pullback down to bar 18, and ultimately had a second leg up that exceeded the high of bar 13. And the shape isn't great, but you could even call it a spike, deep pullback, and channel. At this point, so big sell-off on the open. If you have the encyclopedia or you've studied Al, you know the most likely outcome after a sell-off like this on the open is a trading range for the remainder of the day. So only about 20% of the time you're going to get a major reversal. And only 20% of the time you'll get the bear trend continuing all day. But it's so climactic and unsustainable. Just look at small pullback trends that last all day long. The bars don't look like this on the open. They're not big and climactic. The selling is sustainable. And it's always tricky. Small pullback trends always look like they're going to reverse. They look like legs in trading ranges. So that's why gaps, looking for and recognizing gaps is important. But anyway, we had the most likely outcome today, trading range after the sell-off. And to me, it was most clear to me by bar 13 that we had entered the trading range phase, because we went big down, big up, down to 7, up to 13. Strong bear trends don't have 5-bar bull microchannels from 9 to 13. So to me, this is enough buying to disappoint traders, trap traders below. The odds are there's buyers below. The rally was strong enough to trap traders below. So even though a second leg down is likely, the downside might be limited. And because of the disappointed trapped traders below, second leg up also likely. So here on 13, I thought at this point it was likely that the market was either in a trading range or a bear channel. Obviously, we've moved out of the breakout phase for the bears, but we don't know yet if this is going to start a channel down or a trading range. But we do know that it's not a strong trend after seeing, it's not a strong bear trend after seeing bars 7 through 13. We also know, when we look to the left, that the best the bulls can hope for after this sell-off is probably a trading range. So makes sense for traders to sell here. Looks like about a 50% pullback. And then we started to sell off here again. So for me, bar 16 was another signal. Strong enough down for a second leg. I thought we'd retest the low of bar 7 as well. And to me, this is the start of a bigger second leg. 1, deep pullback. 2, however, because it's a trading range at this point, this could be a leg count reset. Bulls broke the trend line, then we start selling off again. So it also might be leg 1, pullback, weak, leg 2. So big down, big up, big down, big confusion. The market is clearly sideways at this point. We've gone up, we've gone down, we're going sideways. And then we had bars 20 and 21. Bar 20 was stronger than the bears wanted to see. Again, this might be another 50% pullback. That's common when there's this much overlap on the breakouts or on the bars. When breakouts occur in environments with this much overlap, 50% pullback levels are common. Bar 20 was stronger than the bears wanted to see, strong enough that it'll probably get a second leg up. The problem is it's big down, big up again. So the bears are also probably going to get a second leg down. And there's something like an 80% chance that after a pullback, we're going to retest the low close of 18 before we run the stops up here. So we're going sideways for some time here because the bulls need a second leg and the bears need a second leg. bar 22, strong bear bar, strong enough for a second leg. We trapped traders below 21. You have traders who bought below 21, 4-bar micro channel, fairly weak sell signal bar, even though it's a sell reversal bar, not ideal. It's still a bull close and a 4-bar micro channel. But if you bought here, you got trapped on 22. That's going to disappoint you and lead to sellers above. Deep pullback after this breakout, and then a second leg down. But again, disappointment down here. So at this point, by bar 26, we have 3 pushes down. And the market's in breakout mode. You can call it a triangle. I believe Al would say we have 5 legs. 1, 2, 3, 4, or 4, and 5. So the market's contracting. We're in a triangle. All that means is we're in breakout mode. So the market's getting squeezed. And at some point, one side is going to give up. And became very tight in here. For me, I actually thought we'd get the bear breakout because all of the bars were below the EMA. We had this big sell-off, a period of sideways. I thought we'd get trend resumption down, maybe a similar breakout, maybe a breakout similar in size to the sell-off on the open. But then we got bar 31 all the way up through 36 or 37. And this rally, of course, trapped traders below. It's strong enough for a second leg. It broke this trend line. And we went sideways enough that, what Al says, when a pullback grows to 20 or more bars, breakout direction becomes about 50-50. So we sold off down to bar 7, pull back on 8, and then up to 13. So in this area, the pullback began. So from bar 8 to 28, that's 20 bars. So we've gone sideways for 20 bars here. And the bulls are creating higher lows, and that's a problem for the bears. Remember, bears, they're looking for a second leg. The minimum they're looking for is a test of the bar 7 low, really for the market to go one tick below that low. And of course, they never did. When that happens, that traps traders, this bull breakout. The problem with this breakout, and I can't even talk with much authority on this subject. I haven't done the study myself. I kind of vaguely know this. It's something to definitely look more into more deeply. But the fact that this rally began with an outside bar is actually a problem for the bulls. Outside bars are trading range bars. They're expanding triangles. The market often comes back and retests the breakout point after outside bars. You can see exactly what happened here. Bad buy signal bar, 30. Tight trading range, breakout of the tight trading range. Most breakouts fail, so the bulls get the rally, then a very deep pullback retesting that breakout point. And then they got their delayed second leg. But before we get there, rally strong enough for a second leg. So what's the problem up here? Well, look at the bull bars from 31 to 36. Each bar is getting smaller and smaller. The bodies are getting smaller. The entire ranges of bars are getting smaller. And this shows a loss of momentum. Ideally, for a breakout, you want to see uniform sized bars, bars that are really similar in size, not shrinking bar by bar. So the bulls, this is sort of becoming a wedge on a smaller time frame. Certainly through here, there's a bull channel. We tried to get the breakout on 38, but breakout of a bull channel, low probability, also like 3 or 4. We fail, deep pullback, and then reversing back down. Why did we reverse here? Because look back at bar 13. Breakout, bar 14, follow through, more follow through, micro gap from the low of bar 13 to the close of 14, and really the gap stayed open all the way down until here. And gaps indicate trapped traders. Remember I said 5-bar micro channel. I can't prove this. This is just kind of the way I think about it. I justify it. There might be some algorithms that say, okay, we have a 5-bar bull micro channel. I'm going to buy the first pullback because a second leg is likely. And who knows? I don't know how they trade. I don't know how the institutions manage their trades. All I know, or what I've heard, is that they use incredibly wide stops and they can scale in. So a trader who buys here, even if they had a stop below bar 7, they would not have been stopped out. They could buy here, disappointed by the sell-off. Maybe they buy again after a second leg down, and then look what happens. The market retests their original entry price. So a trader could have bought here, scaled in, made money on their second buy, and break even on their first entry. That's why we stalled here. We're testing this breakout point high in a trading range. So 40, bar 40, strong enough reversal, second leg down likely. In this case, we went bear breakout, pause, bear breakout, pause. So you could call it 2 legs down, but no significant trendline break here. This sell-off is a spike. It's a simple leg. There's no pullbacks, no technical pullbacks. I said there are pauses. These are implied pullbacks, but this is one breakout. So the first reversal will probably fail. Traders will sell it. We test this first pause, the area of the first pause here, and then get a quick second leg down. But now we're testing this breakout point again where there are trap traders below. Same thing I said here can be applied here. Bears, they sell here. They use a wide stop up here. Disappointed with the rally, they scale in. They get a chance to avoid a loss. So down here, bears are buying. Bulls are always buying. We have to go higher to find traders willing to sell. Then we get this rally, 4-bar micro channel to bar 51. Odds are second leg up, likely. So first reversal, probably minor. Traders buy below the first. They buy the first pullback below 52. We rally even stronger up to bar 58. Is this a second leg trap? It really could be. You always have to respect that. And you don't know if it's leg 3. This might be a bull channel, maybe 1, 2, 3 pushes up. You could say it's leg 2, 1, pullback, 2, nested, 1, pullback, 2. So because of that, traders might be hesitant to buy up here. We're testing high in the trading range. This is more of a sell zone. But you can also judge the strength of the reversal attempt compared to the breakout. So here's the breakout, 54 through 59. Pretty decent rally, but not ideal placement or the area high in the range. So what do traders do? They stop buying up here when we start losing momentum. Big breakout bar 57, but much smaller follow through, even smaller bar 59. We have to go lower to find buyers. So where do buyers come in? It's somewhere in here. There's a breakout point. Look at the hive bar 52. This was a breakout point. Now, if you were quick, if you sold above 52, 54 was your entry bar. So if you were disappointed with your entry bar, 54, you could have avoided a loss. And it looks like you had a couple of bars, maybe 2 bars to avoid a loss. But if you weren't quick, you can see the give up bar, traders got trapped here. This breakout point becomes support. And when the market retests it, even though it's a 4-bar bear micro channel, we're testing a breakout point. And the bear breakout is still smaller than the rally. And at this point, we have a rally above the moving average. Now we have the moving average for support. And this also traps traders. A 4-bar bear micro channel should get a second leg down. But when you get bar 63, and you know, this might be a tight bull channel, leg 1, leg 2, maybe we need leg 3. So 63 is the bar. The traders probably exit shorts above, and they can buy above it, looking for another leg up. But the upside might be limited. Like I said, it might be leg 3 in this area. You're attempting to break out of a bull channel. So good breakout bar. 64, a little climactic, and then bad follow through. It's probably going to lead to a pullback when you start losing momentum. Traders don't want to buy the close of bars here, because we're going sideways, they'd rather buy value a pullback. So when you start losing momentum, you pull back to find buyers. We're testing a breakout point, maybe the bar 61 high. If you're a bear, maybe you sell above 62 or 63. You sell above bear bars, you get trapped. Market retests these prices. We retested close to the 61 high. We rallied for that second leg. And becoming a tight trading range here at the end of the day, the bull's ultimately getting a better second leg than this one. So that's going to be it for today's review. Thanks everybody for watching, and I hope everyone has a good night.